Hello, and welcome back to Accounting Recounted. I'm Amanda Hendren, and today we're tackling one of the most critical issues that can truly make or break any small business, and that is cash flow management. Cash flow is the lifeblood of any business, but for small businesses in particular, managing cash flow effectively can be challenging. In today's episode, we are going to explore common causes of poor cash flow management, and then I'll discuss some practical strategies to fix these problems. Let's start with understanding what cash flow management actually is. Cash flow management is the process of monitoring, analyzing, and optimizing the net amount of your cash receipts minus your cash expenses. Essentially, it's about making sure your business has enough cash to meet its obligations at any time. It sounds simple in theory, right? But as we know, in practice, it can be quite complex. So let's talk about some of the major causes of poor cash flow management in small businesses. From what I've seen out in the real world, here are some of the top culprits. Number one is poor sales forecasting. So many small businesses struggle because they don't accurately predict their future sales. Of course, when you can't accurately predict your sales, it can lead to overestimating your income and underestimating your expenses. For example, a small retail store might anticipate higher holiday sales and stock up on inventory so they have a bunch of stuff for their busy season, only to find that the sales were not as high as they were expected. The result is excess inventory that is that ties up your cash and additional storage costs if you can't get rid of that inventory. Number two is late payments from clients. This is one of the most common issues that I see in small businesses that my clients have to deal with, and just people, small businesses in general, right? This is a problem. When customers don't pay you on time, it can cause a significant strain in your cash flow because you were expecting this money to come in and it's not here yet, which makes it really difficult to pay your employees, pay your rent, and any other immediate expenses that have to be paid. If the money's not coming in, you're kind of in a rough place. We'll talk later on some ways that I help our clients avoid this problem. Number three is high overheads. So small businesses sometimes have high fixed costs, such as rent, utilities, salaries, and if they are not managed well, they can quickly eat into your cash reserves. Let's just keep an eye on our overhead expenses and cut where you can, because ultimately cutting expenses is an easy way, obviously, to help with your cash flow. Number four is overstocking. If you are in the retail or manufacturing sectors, you know what I'm talking about. Holding too much inventory ties up your cash that could be used somewhere else. Number five is poor financial planning. Obviously, without a solid financial plan, it is easy to mismanage resources, and you may find yourself in a cash crunch later on down the road. So, I've listed out 5 causes that are kind of common with poor cash flow management. Let's talk about some ways that we can improve these processes. Number one is create a cash flow forecast. I recommend predicting your cash flow for the next 6 to 12 months. The forecast should include all expected income and expenses. So, for instance, if you run a seasonal business, you probably do, anticipate higher cash flows during your peak seasons and lower inflows of cash during your off seasons. Regularly updating your forecast can help you anticipate what kind of cash flow issues you might run into before they happen. So, let's say, for instance, you run a pool supply company in an area where it's very hot in the summer and very cold in the winter. If you're regularly updating your cash flow forecast, you will be able to see how many months you have left before, number one, before your busy season is over and you're kind of living on reserves. And number two, when that cash is going to run out. So maybe you take that opportunity to say, okay, look, in 4 months, we're going to be out of cash because our busy season is over. What can I do now to try to avoid that in 4 months? Maybe it's you know, going ahead and letting go of those seasonal employees that you hired over the summer. Um, Maybe it's running sales on some of your inventory because you know that once this busy season is over, no one's going to buy that inventory anymore because no one's thinking about swimming pools. So, I think that's why you see a lot of these end of summer sales and things like that. They're looking ahead and trying to get rid of these expenses before their slow season. Okay, let's get back on topic. So, when we're talking about the late payments from clients, again, this is a huge problem that I see a lot. And the solution here is to invoice your customers promptly. And this is the key. So I'll say it slowly. Follow up with your customers. Let's say it again. Invoice your customers promptly and then follow up with them. You can't just send them an invoice once and assume they're going to pay immediately, even though that would make all of our lives so much easier. You have to follow up. So, what I say is ensure that you invoice your clients or customers as soon as the work is done or the product is delivered. If you run a service-based business and it's possible to bill in advance, I recommend doing that because then you don't have to provide the service unless they've paid you. Once you've sent out the invoices, it's so important to implement a system or process to follow up on overdue invoices promptly. I recommend if you're in QuickBooks, you need to make sure you have your invoice reminders set up. That's in your company settings. And I think you can do 3. Maybe you can add more to where it's automatically just going to remind your clients via email if they haven't paid your invoice yet. And then depending on your payment terms, I recommend following up with your customers that have not paid if they are anywhere from 30 to 60 days late. You need to pick up the phone and call them. It's likely that it landed in their inbox somewhere and they never opened the email again. Calling them or following up via email is the best way to collect on those payments. I recommend running an AR aging report every month to see where your client stands. So, like I said, if someone is getting later and later and later, and they still haven't paid, you need to follow up. You can't just assume that they will pay. And a lot of times, I'll be honest, even though those invoice reminders are helpful in QuickBooks, they don't always make people pay. A lot of times you need to call. So I'll just put that out there. Number 3, when we're talking about our overhead expenses, I think you need to, if this is something that you think is a problem, you need to take a look at your fixed cost and identify areas where you can reduce expenses. Sometimes that involves negotiating better terms with your suppliers, or maybe you have a huge office space and you don't use a portion of it, so maybe you can sublease some of that so that you're getting a little bit of money back. And just generally cutting unnecessary expenses. Look at your subscriptions that you think you need. All those kind of things can help with cash flow management. You can also, like if you're a manufacturing business, you should try to negotiate bulk discounts with suppliers. Or if you're feeling up to it, you can invest in energy efficient equipment that might reduce your utility bills in the long run. Those are kind of like bigger projects, but worth looking into if this seems like a problem in your business. Okay, let's talk about inventory. You need to manage your inventory wisely. You need to implement an inventory management system to ensure that you're not overstocking. I think a lot of times people or business owners, they want to order a lot because you don't want to run into a situation where a client is trying to buy something from you and you don't have the inventory. I get that. We don't want that to happen either. But I think we need to start paying attention to overstocking just as much because it can hurt your business just as badly in the long run. I recommend using sales data that you have, if you have it, to predict the demand that you're going to have and try to keep just enough inventory on hand to meet your customers' needs without tying up too much cash. If you don't have an inventory management system, I highly recommend you get one because that is how you're going to have and be able to predict your demand later on. Okay, 2 more points. The next thing is I recommend establishing a cash reserve. Just like when we personally want to save money for ourselves and our families, For your business, you also need to set aside a portion of your profits into a cash reserve account. This essentially provides a buffer during periods of low cash flow and allows you to cover your expenses without taking on more debt. And my last bit of advice is, of course, you may need to at some point seek professional advice. If you're feeling like you're at a place cash flow wise where you're not sure how to come back from where you're at, it can pay off greatly in your favor to get advice from a financial advisor or an accountant. My firm can help provide insights tailored to your specific solution and help you develop a comprehensive cash flow management plan as part of our ongoing full service accounting uh, plans. But if you don't feel like you need bookkeeping or accounting, we have some financial advisors that we can recommend to you. So reach out to us if you need help with this. We would love to, see what you have going on and see how we can help. Okay, guys, that is our show for today. As you've learned, managing cash flow is an ongoing process that requires your diligence and foresight. By understanding the causes of poor cash flow and implementing some of the strategies that we talked about today, I believe that your business can improve its overall financial health and set yourself up for long-term success. That is it for today's episode of Accounting Recounted. If you found the information in this episode helpful, please subscribe, leave a review for me or a comment, and share this podcast or video with other small business owners who could benefit from it. Until next time, I'm Amanda Hendren with Accountable Numbers, and remember, smart cash flow management is the key to sustaining and growing your business. Stay tuned for more insights and tips in our next episode.